Hello everyone and welcome to the Mo Talk Show where money matters. I'm Mo Shehu and throughout this season, we'll be helping young professionals and entrepreneurs make better money decisions. In this episode, we'll dive into what you need to know before beginning your investment journey, the right mindset to have, how to figure out your risk profile, and what investments are currently seeing the highest growth rates. We have an expert in studio to help us unpack this topic. But before we meet our guest, go ahead and like, subscribe, and follow us online at the Mo Talk Show ZA across all social media platforms. Compound interest is deemed the eighth wonder of the world, and for good reason. Early investments in different financial instruments like stocks, bonds, and annuities have been shown to compound over time and help people retire more comfortably. Many companies offer benefits pertaining to this, like pension fund contributions and stock options to early employees. But how can young professionals in South Africa get into investing early? What are some of the mindsets that might lead to success or failure? And which investments have seen the highest growth over the past few years? Joining us is Mr. Thabang Radingoana, also known as the Minister of Finance on Twitter because of how extremely invested he is in teaching people about investments. Thabang, thank you so much for joining us today.
Thank you.
So let's start off with a very easy question. Firstly, how are you?
I'm good, thanks.
Yeah, no, it's good to see you relaxed.
It's a pleasure.
I was just thinking, before we jumped on this episode, I was thinking about how we met. We actually met on a space, correct?
Yes, we were talking in career development.
Yes.
And how new graduates can actually develop their careers.
Yes, early stage graduate advice. I remember that was a very fantastic space. So, kicking it back into investments, what's the worst investment decision you've ever made?
I would say my biggest mistake was starting my investment journey without actually understanding the basics or fundamentals of investing.
Mm-hmm.
So I would literally just look at the worst performing companies and put my money into them, hoping that they would go up. But then with time I realized that's not the case. And hence today I'm doing what I'm doing to try and teach others not to make the same mistakes that I did. I won't go into actual companies, but yeah, there's a few that I've invested in and that have either crashed and they still haven't recovered, and some actually got liquidated. And yeah, I've lost a bit of money.
I think I have a few names in mind, but we'll avoid naming names.
Yeah, you probably know.
Yeah, I'll probably know them. So I mean, if someone is starting the investment journey today, what type of investments would you definitely advise them to avoid?
Right. So investment that offer you high returns. So obviously, historically, we know the average returns across, say, equities or the property or bonds. So if someone's going to offer you, say, 50% return, especially within a short period of time, that raises red flags. And then investments whereby you get recruited through, say, WhatsApp, whereby you have to send money to personal investment, personal accounts. So that you should try and invest those. Because we know the only way you can invest is through a registered stockbroker on the JSE.
So, I mean, in your experience, what's a common misconception about investing that a lot of South Africans have?
Right. So the misconception is that investing has always been for the rich. And what we don't realize is you don't invest because you're rich, you actually invest and you get rich. Right. And I think that, but with the misconception, it's understandable given where we come from as a country with our background. But I think that landscape has since changed. There's a lot of platforms where people can actually invest from as little as, say, 10 rand. So that has pushed other competitors to try and create open the field for everyone to invest, for an ordinary South African to actually invest.
I think what's been lovely observing over the past couple of years is the democratization of investment opportunities. So you mentioned a few competitors and platforms that are opening up opportunities for South Africans to trade. I don't even know if we're allowed to name names. Easy Equities is one of the ones that comes to mind. So, speaking about misconceptions, what is the most effective mindset to carry when you're starting your investment journey?
I think the most common mistake that we made, we think invest it's a quick rich scheme, which is not. Investing, it's more long term. And I think we've proven in the past that people who invest longer obviously get better returns as opposed to people who try to time the market. So timing the market would be an active manager whereby you buy and sell instruments over a quick time frame as opposed to buying and holding assets over time.
So it's kind of like slow and steady wins the race.
Correct, yeah.
And then, looking back over the past couple of years, what type of investments have you seen generate the highest returns?
So we have a number of asset classes or instruments that people can invest in. We have shares or also known as equities. We have property. We have exchange traded funds, which are made up of shares, obviously. And then you have property, you have bonds, and then you have cash. So those global equities are proven to be the best performing if you look at, say, the past 5 to 7 years. And coming back locally as well, I think equities have been doing well as well. And also what we another form of asset class that we tend to overlook is bonds. Bonds are actually very secure, very low risk, and some offer you actual protection of your capital. So locally, I would say, equities and secondly bonds.
Go ahead.
Over the past 5 to 7 years.
Okay. And then on the flip side, what type of investments have you seen either be the worst performing or generating the lowest returns?
Locally, I would say the property market. If you look at long term, say in the last 5 years, the property market has been down. So people who invested in the last 5 years, their investment hasn't really grown, or some probably have lost money. And obviously lately in the past year or so, most especially businesses that were involved in either hotels or leisure or traveling, basically due to the COVID, it's been hit hard.
I think what's fantastic is, in this season, we have a property specialist who's going to be coming later on in one of our future episodes to talk about investing in real estate. So it'd be interesting to get some of her thoughts on that. Now, as someone who works in mining, would you advise mining stocks as something to invest in? And what's your rationale behind your answer?
No, definitely. Obviously, my view might be a bit biased, but if you look around all the products, equipment, and tools we use, they are in a way made up of raw materials that we dig from the ground. So, yes, mining is here to stay. I would highly recommend for someone who would like to get started investing. Obviously, not to throw all your money in there, but have some exposure to commodities.
Not all your money, just 99%.
Yeah.
Just 99%.
Yeah, a bit of it.
So, I mean, you mentioned a good point about not throwing all your money into it. How does one gauge their risk appetite when it comes to investing? And how has your own risk appetite kind of fluctuated over the years?
So with risk appetite, you're looking at how much money are you willing to risk in order to get your returns. So generally for younger generations like us, because we still have time to retirement, so you are 30s, let's say 30 years to still invest. So you can take a bit more risk, so you can invest most of your money, say equities, as I mentioned earlier, that they've been proven to give the highest returns with time. So you can afford to get exposed to a bit of more risk. Whereas if you're approaching towards retirement, say to your 50s or 55s, you don't have that much time. Obviously, you want to secure your capital. Certainty. So you try to shift your money towards the high risk assets to lower either cash or even bonds. So with cash, if you're holding cash, you're basically just saving money. So that the interest is limited, say 4 to 8% if you like. But then because of that uncertainty you bring in, you rather just put your money there and then try and get some little returns, but you have security of your capital.
What I find ironic in that situation is that young people generally don't have that much money to invest to begin with.
Yes.
And someone who's a little bit older, they've had time to stockpile cash and other investments. But then we tell the people who don't have money to invest as much as they can, and we tell those who have the money to kind of slow down. So I'm getting the idea that when it comes to investing, it's not so much about the returns, but about your ability to bounce back from failure.
True.
So if you're young, you're allowed to make these mistakes because you have time to recover. But the older you get, the less time and the less opportunities you have to make back the money.
Definitely.
Especially because there's a lot more at stake.
Correct.
So, I mean, talking about risk appetites, you're a father yourself.
Correct.
What type of investments would you recommend parents make into their children's futures?
Okay. So in terms of products, there's a form of investments that the government have introduced, I think 2016 or 15, called tax-free savings account. So tax-free savings accounts, you are able to invest your money in certain, say, ETFs or trusts, whereby the money that you receive in the form of dividend, of course, you don't get taxed on. So it's one of the ways that they encourage South Africans as a whole to try and save or invest. So for young kids, you can try and look at those products, because obviously they're still young, they still have that time that we spoke about to actually take advantage of those returns in the market.
Are there any specific limits to these tax-free savings accounts?
Correct, yes. So currently the limit is 36,000 rands per annum, with a lifetime contribution of about 500,000 rands.
500,000 rands. So once you hit 500K, then does that mean you start getting taxed on your investments or the returns on those investments? Or does it mean that you can't put in any more money into those types of accounts after 500K?
Correct. So for the instant annually, the limit, as I said, is kept at 36,000. So whatever interest that you get based on the 36, you don't get taxed on. But whatever you contribute above that, then you get taxed on.
Okay. And then, shows like these are a great starting point. But what other books, resources, podcasts, shows would you recommend people to go and check out when they're starting their own investment journey?
There's a start, there's YouTube, there's a lot of financial content creators out there, and of course social media. There's a whole Twitter community on Twitter posting information related to finances, budgeting, savings, and even books, Rich Dad Poor Dad.
I've seen that book get slammed on Twitter so much. So I mean, should we really tell people to check it out?
Yeah, it's one of those just for people who are starting out. How to make my first million. Yeah, I could go on and on. It's with books, it's important, or podcast information. As I said to my first point, it's important that one equips themselves with the right knowledge prior to starting their investment journey.
If you are having investment discussions with your firstborn, how old is your firstborn?
My firstborn is 5.
5 years old?
Yeah, he'll be starting school next year.
Yeah, no, when I was 5 years old, I was learning how to ride a bike. I was not being taught about investment. So I think it's great that you're having these conversations early. And one other thing I wanted to mention is that social media is such a powerful disseminator of information as well. So as much as people are going to read these books and watch these podcasts, they should also follow accounts like yours on Twitter. Yeah, and then they can learn more. I mean, yeah,
as I said, there's a whole community. Fred, I believe he referred me to.
Fred the investor, yes.
There's Afro-Tez, the likes of Pinky Sitole, there's Latin Property, there's Okelets or ETFs, there's the Mamo, there's the likes of Greta and Hosi. Yeah, those are some of the guys that I've interacted with that I've actually learned a lot from. So I think social media, it's a powerful tool that people can actually use effectively to either learn or create content.
And it's a lot more accessible, and the names that you've just recited, these sound like South African names, South African people on finance Twitter.
Yes.
Is there like a WhatsApp group that you guys are all on that you must join?
No, it's a Twitter community. It's in the open, so you can simply follow the people. And
I see.
Yeah, and they share info. You can retweet, you can like, put in comments. It's all about engagement and sharing ideas towards this journey towards financial freedom.
And I'm just thinking, once COVID abates, one could actually throw events that are themed around investing and have all these people come either speak or share their knowledge and have other people learn from them. You recited a bunch of names. Who's one investor that you look up to that you feel people should learn more about and learn from?
Okay, I've recently met Thabang Radingoana. Well, I haven't met him physically, but we've engaged on social media, as I said. He's the CEO of Shehu Capital.
Okay.
He's an entrepreneur. He's a businessman. I just like his strategy around investing in African economy. He's pro-African, so he invests in business that will advance growth in Africa, be it in healthcare, IT, telecoms, and health, of course.
If you've learned something important or fascinating or new from Thabang today, please let us know your thoughts on social media. We are at the Mo Talk Show ZA everywhere. Now, Thabang, before we say goodbye, I'd like to know, what financial advice would you give to the 20-year-old you?
I actually wish I was 20 now. I would advise myself to start early, as I said before, the element of time, and be patient, have a long-term view of things.
Investing.
Yes, and do not follow what other people are doing without understanding and doing your own research. So make decisions that are applicable to yourself, understand your risk profile, how much risk are you willing to take. I think we touched on that. And generally invest in your knowledge. There's a saying that an investment in knowledge pays the best interest. So the first start would be educating yourself and getting guidance from the right people to actually, guide you through that process.
Awesome. Thabang, thank you so much for coming here today and sharing your thoughts with us. And thank you for watching the show. If you want to drop any comments on investing or how to get started or what pitfalls to avoid, please let us know on social media at the Mo Talk Show ZA everywhere. We are on Facebook, LinkedIn, Instagram, and Twitter. Join us in another episode as we discuss money matters. I've been your host, Mo, and I'll catch you next time.